Hello again, and welcome back to the Brent Bruce Daily. Today is July the 29th. It is 2:34 Central Time, and man, oh man, I am going to show you some big news that came out today, as well as what the result is the day after the Federal Reserve, actually now 2 days after the Federal Reserve increased the federal funds rate by 0.75%, and we're going to see if this continued through. But man, I just have to take a minute, and I don't like to beat up on people, but this is just so obvious. Okay, take a look here at the main article here on CNBC. Mortgage rates tank after a negative GDP report and the Fed's latest hike. Okay, so does that sound like a good thing to you? That mortgage rates tanked? I mean, why would you use that terminology trying to explain something that is actually doing so well, right? So, I mean, even if you just click on this little clickbait here. So let's click on it and let's see what Diana Olick actually wrote about. Oh, mortgage rates fall sharply after negative GDP reports. So this is a good thing for home loan interest rates. But the way that it is described in order to get a click is mortgage rates tank. For some reason, Diana Olick specifically always wants to make the housing market look like the sky is falling. I guess it's just because, negative news sells, apparently. But I mean, why wouldn't she have said something like mortgage rates, improved tremendously as a result of the wonderful actions of the Federal Reserve? Why wouldn't she say anything positive instead of saying mortgage rates tank? This is such a misleading comment that when I saw that today, I kind of had to take a double take. I'm like, wait a minute, I thought rates were doing well. And then I had to go back and look and oh, okay, rates are doing great. As a matter of fact, they're doing even better than I expected today. So don't worry, mortgage rates did not tank. I mean, unless you look at it, and say, well, mortgage rates fell, but that's just not the word that I would use. Okay, I'm going to get off my soapbox here. So let's take a look here. The charts here show yesterday we banged up against this ceiling of resistance, which was our 100-day moving average, with hopes that we would break above this 100-day moving average and try to start making a run at this Fibonacci level and then up from here. Remember that this was 4.99% on the Brent Bruce Daily scenario. Broke above that. Yesterday we were at 4.875, which was better than I had expected that we would see. So now we are above. We're currently above the 100-day moving average, which is great news. You see, it's starting to kind of drip down here, but that's great news. If we can close today, and the market is going to close here in about an hour and 20 minutes, we can close today above the 100-day moving average. We're in a very good position because next week we're not going to have a whole lot of market moving housing news. We don't expect. I mean, we never know what's going to come out in the news. But so far, it looks like a pretty slow and calm week next week. So maybe we can solidify ourselves above this 100-day moving average. So where are we? Let's take a look at the tanking home loan interest rates. Here's the market trend. Shows 5.424, which we know is not what we had even yesterday. I mean, yesterday we were at 4.875 on the Brent Bruce Daily. It just goes to show that our interest rates are so much lower than the national averages. So let's take a look at our scenario here, the Brent Bruce Daily, and see where we are with this improvement. And mortgage rates tanking. 4.75% with no points. What an improvement. I mean, it was not that long ago that you were listening to this show and hearing that I was talking about 6%. We were happy that we were doing a 5.99 with no points. And I was definitely seeing moments where we were up about 6.25. Look at how much of a reduction we have experienced in really the last two increases in the federal funds rate by the Federal Reserve. That has been the difference, that they increased their federal funds rate, which slows inflation. It's designed to slow inflation, which mortgage-backed securities like. Mortgage-backed securities are bonds, and mortgage-backed securities are what truly dictate the interest rate that we charge on our home loans. All right. So we have seen the effects of the Federal Reserve increasing the federal funds rate really help us in two ways. So, I beat them up quite often, but so far the movements that they've made have been, I believe, effective. I think that the economy is slowing. We're not seeing it yet in some of the dated reports that are coming out, but I do see, everyone kind of feels a slowing of the economy in general. On top of that, look at gasoline prices have come down quite a bit. That's not because of the federal funds rate. That's because of the supply and demand. But the gasoline prices have come down as well. So we're seeing a little bit of a moderation overall in the economy. And because we are seeing that effect from the Federal Reserve increasing the federal funds rate, the bond market likes that, which is friendly to mortgage-backed securities. So home loan interest rates have been improving as well. So what we want to see, if we get to follow our charts here and we move up into this range, we are hoping that we're going to be looking at the low fours, 4.25, 4.125, and that we will see an improvement like that. Now, that's a long way to go still. This is really nice, seeing a 4.75 with no points. What if we were to open this up and see, what if you paid a point? If you paid a point, you're at 4.375, just over a point. All right, so just a really strong and beneficial run in interest rates these past, what has it been, about 6 weeks, 7 weeks that we've been watching the Federal Reserve make some changes, and it's been working out. But make sure that you know and communicate to those that are interested that when CNBC says that home loan interest rates tanked, it was just a bad word to use to say that they've actually gone down, which is an improvement. I don't know about you, but I don't want my life to tank. All right. I don't want, things to tank. That's just a kind of a bad word, isn't it? But home loan interest rates have improved. Home loan interest rates have improved. Great news to end the week. 4.75, 0 points loans. Give me a call and let me know if you would like for me to talk to your clients about what we can do for them with our lower interest rates. Have a great day. Have a great weekend, and we'll talk to you again soon.